So, you've spent your entire life saving for retirement. But how do you actually turn that nest egg into a paycheck you can count on month after month for the rest of your life? Well, today we're going to dive into an annuity playbook to demystify a tool designed to do exactly that: create guaranteed income. Let's get into it.
I mean, this is the dream, right? This is what it's all about. The freedom to just enjoy these moments without that nagging worry in the back of your mind about what the stock market is doing or what your bank balance looks like. You know, this kind of peace of mind, it isn't just about having money. It's about having a reliable source of income, no matter what happens.
And that really brings us to the big question. After decades of working hard and accumulating your wealth, the whole game changes. The focus shifts. It's no longer just about growth. It's about protection. It's about turning those savings into a paycheck that you absolutely cannot outlive. So, what's the plan?
When you really dig into it, there's one fear that looms larger than pretty much any other when it comes to retirement: market volatility. The thought that a sudden crash could wipe out a huge chunk of your savings right when you need it the most, well, that's a major source of anxiety. And it's tied directly to that even bigger fear of just outliving your money.
This right here is what the experts call sequence of returns risk. And it's a tricky one. It's not just what your returns are, it's when they happen that matters. A big market downturn in those first few years of your retirement can have a truly devastating long-term impact on how long your money will last. It's a risk that can quietly sabotage even the best laid plans.
So, how do you protect yourself against this kind of risk? Well, the playbook suggests thinking about a solution that might sound a little old-fashioned: a pension. But not one from an employer, one you actually create for yourself. And that is the core idea behind an annuity. It's a tool to build your very own personal, guaranteed income stream.
At its heart, this is really all an annuity is. It's a pretty straightforward exchange. You give an insurance company a lump sum of money from your retirement savings, and in return, they make a promise to pay you back with a steady, predictable paycheck. Simple as that.
And this quote from the playbook just hits the nail on the head. The key words here, the magic words really, are dependable and guaranteed. This is all about taking a portion of your retirement savings off the table, removing that market risk, and using it to create a stable financial foundation you can build on.
But here's the thing. Annuity isn't just one single product. It's a whole category, and they are definitely not one size fits all. The playbook breaks down several different types, and each one is designed for different goals and different timelines. So let's take a quick tour and see if we can find the right fit. First up, we've got the Single Premium Immediate Annuity, or SPIA. I know, it's a mouthful, but the name basically says it all. It's for someone who needs income immediately. You make one single payment, a single premium, and your guaranteed paychecks can start as soon as the very next month. It's the most direct way to turn a piece of your savings into predictable cash flow.
So who's this for? Well, it's a perfect fit for someone who's retiring without a traditional pension, someone who really values stability above all else. If your main goal is to create a secure, predictable income stream, like right now, the SPIA is designed for exactly that.
Okay, next up is the DIA, and this one is all about planning for the future. You make a payment now, but that income stream, it doesn't start for years. You can almost think of it as buying your future retirement paycheck today, but at a discount.
You can see the use case here is super specific. This is for someone planning way in advance. Maybe you're in your 50s or early 60s, and you want to solve for what they call longevity risk. You're basically creating a safety net to make sure you'll have income coming in when you're in your 80s and 90s, long after other assets might have been used up.
All right, finally, let's look at a kind of hybrid option: the Fixed Indexed Annuity, or FIA. Now, this one tries to give you the best of both worlds. Your returns are linked to a market index, something like the S&P 500, so you get the potential for growth. But, and this is the absolute key feature, your principal investment is protected. If the market goes down, you don't lose that initial money.
So the person this is built for is the one who says, look, I want a chance for my money to grow with the market, but I absolutely cannot afford to lose my principal. It's all about finding that balance, growing your assets while safeguarding them from loss.
Okay, this next section is fantastic because it's where the rubber really meets the road. The playbook shows how an annuity can be used in a really powerful way to maximize one of your most important retirement assets, your Social Security.
Just look at this chart. The numbers really do speak for themselves. The longer you wait to claim your Social Security, all the way up to age 70, the bigger your monthly check is going to be for the rest of your life. Delaying from 62 to 70 can boost your benefit by over 70%. I mean, that is a guaranteed, inflation-adjusted return you just can't get anywhere else.
But you're probably asking, how do I afford to wait? And this is where the bridge strategy comes in. You can use an annuity, like that SPIA we talked about, to create an income stream to live on from, say, age 65 to 70. This bridge income covers your expenses, which lets you delay claiming Social Security and lock in that much, much larger benefit for life. Pretty clever, right?
Now for a more advanced topic from the playbook, but one that gets overlooked all the time, annuities can actually be a really strategic tool for managing your taxes in retirement, especially when it comes to something called RMDs. So here's the situation. Once you turn 73, the IRS says you have to start taking money out of your traditional IRAs and 401ks. They're called required minimum distributions. Now, if you've got a large balance, these forced withdrawals can be pretty substantial, and they can easily push you into a higher tax bracket, creating a big tax bill you might not have planned for.
And the playbook illustrates this perfectly with a tale of two retirees. So you've got retiree A, who has no plan and just gets hammered with these big taxable RMDs that bump them into a higher tax bracket. But then you've got retiree B, who was proactive. They used an annuity to create income before those RMDs ever kicked in. By strategically lowering their account balance, their required distributions were smaller and their tax bill was way more manageable. It's a powerful example of what planning ahead can do.
So, after all this, what's the big takeaway? When you boil it all down, the core idea presented in this playbook is that an annuity isn't supposed to be your entire portfolio. Not at all. Instead, its main purpose is to create an income floor, a baseline of guaranteed income that covers all your essential expenses. This gives you that security and confidence to really go out and enjoy your retirement.
And that leaves us with one final question for you to think about. What does your financial floor look like? How much guaranteed income would you need every month to cover your must-have expenses? Answering that question? Well, that's the first step toward building a truly secure and confident retirement. Thanks for joining us.